Welcome. In this video, we will analyze HBAR Coin's next move. Don't forget to subscribe and like, and please watch to the end to understand. As mentioned in the previous video, the price successfully broke through this descending trend line. This was an important technical indicator in the market because it signaled that the downtrend might be ending and an upward move could be starting. Now, the price is in the process of a retest following this breakout, and this stage is very critical. For many investors, this moment becomes a key point in determining the direction of the market. The retest phase generally refers to the level that was broken being tested again. In this case, the price pulls back to confirm the breakout and attempts to find support at that level. If the price holds at this support level, it is usually seen as a sign that the upward movement will continue more strongly. This is because, after a level is broken, a price pullback and holding at that level shows the strength of the buyers in the market. This indicates that a bull market has started and the upward trend is continuing healthily. However, if the retest fails, meaning the price cannot hold above the support level, a pullback or even a new downward move may occur. Therefore, it is crucial to watch whether the retest is successful or not. If the price remains above the broken trend, the likelihood of continued upward movement is quite strong, and this is a very positive signal for investors. If the retest is successful, the price is expected to move upward again. This movement gains strength as the previously broken resistance levels turn into support. This allows more buyers to enter the market, speeding up the upward price movement. By closely monitoring such technical formations, investors can make purchases at the right moments and increase their profits. Furthermore, successful retests often signal the potential for larger price movements. This kind of confirmation can help accelerate the upward trend. Investors can benefit from both short-term gains and find strong long-term investment opportunities. The continuation of the upward movement typically leads to progress toward larger targets. If the price remains at this level, it builds confidence in the market and attracts more investors. This retest process provides a crucial opportunity to test the strength of previously broken resistance levels. If the price holds strongly at this level and begins to rise, it is a significant sign that the market will continue to strengthen and move toward higher levels. In such a case, additional technical support may kick in to sustain the price's upward movement. The activation of these supports strengthens investor confidence and increases buying pressure in the market. We must be patient to see the reaction here. But it's not enough to just look at trends. We also need to consider other metrics. Keep watching. The support line at this level is indeed a very important technical indicator. This line represents an area where the price has repeatedly reacted in the past, making it a very strong level. Support levels reflect market psychology and are closely watched by investors. When the price approaches such critical levels, investors may become more willing to buy from this level, as the reaction here is often seen as a significant resistance factor that causes the price to reverse. Looking at the observations where the price has tested this level and reacted in the past, it is clear that buyers have been dominant here, and the selling pressure has weakened. In other words, when the price approaches the support line, it is generally met by buyers, and the price rises. This shows that this level functions as a solid psychological barrier, and market participants tend to buy at this point. The strength of this support line is not only based on past performance, but also on market perception. Investors typically view the price approaching support levels as an opportunity and buy from these levels to minimize their risks. If the price reacts from this level, it indicates that buying pressure in the market is strong, and this could lay the foundation for a new upward wave. But what happens if the price breaks this support level this time? In that case, the reasons behind the breakout should be carefully analyzed. Breakouts can sometimes be caused by sudden changes in market conditions, economic developments, or actions by large investors. However, such a breakout could also create new opportunities. Specifically, if the price breaks through the support and moves to lower levels, it will attract more attention from market participants and create new buying opportunities. To emphasize the importance of this support level for investors, strategies for buying can be created here. If the price touches this level and shows a strong reaction, investors can strengthen their positions and take short-term profits. Additionally, testing a support level is often considered a transition point. Therefore, we need to watch how the price reacts from this support level. The breakout of the descending trend observed in the RSI indicator is not just a short-term change, but also signals that the market may be entering a larger transformation process. Such a breakout indicates that buyers are beginning to exert increasing pressure in the market, and market conditions are starting to shift. As the RSI breaks the descending trend and starts moving upward, it clearly signals the rising strength of buyers, and the weakening selling pressure. Typically, such situations are critical points for the market to gain strength and for prices to begin accelerating upward. Breaking a descending trend by the RSI is a very important signal, especially for investors and technical analysts. This movement shows that buyers are starting to take a stronger position in the market, and sellers are losing control. The dominance of buyers generally leads to rapid upward movement in prices because RSI moving upward is a significant sign of increasing buyers and a strong market reversal. This shift in market strength can trigger more investors to enter the market and drive prices up quickly. The rise of RSI also indicates that the market was previously in an oversold region and is now beginning to recover. This is a recovery that comes after a period when prices fell and investors were nervous. If the RSI breaks this descending trend, it may indicate that the pressures the market had previously faced have ended and a new upward phase may begin. This could lead to higher prices and the market finding a new equilibrium. Additionally, the upward movement of RSI indicates that market sentiment is improving and investors are becoming more positive. The increasing interest from buyers will lead to more purchases in the market, pushing prices upward. The movement of RSI is not only a technical indicator but also an important data point reflecting the market's psychological state. Investors can recognize that with RSI rising, the market is entering a stronger buying trend. Such breakouts in RSI are considered big opportunities in technical analysis. This is because RSI shows not only overbought and oversold conditions, but also the general trends in the market. If the RSI breaks the descending trend, it indicates that buyers are starting to take a strong position in the market, and prices have the potential to move upward quickly. An environment where short-term selling pressure has ended and buyers dominate the market is often a good opportunity for long-term buying. In this case, the upward movement of RSI can be seen as a strong signal for buyers. Investors can follow this signal and assess the positive market sentiment and the potential for price increases. If RSI continues to move upward and this rise continues, the market could recover significantly and move toward higher price levels. This process can create a profitable opportunity for investors as the market attracts more investors with a strong upward movement. Such upward movements in RSI suggest that the market has entered a strong buying phase and that there is a high probability of significant price increases in a short period. These movements provide important opportunities for both short-term buyers and long-term investors. However, it is important to carefully monitor market movements after such breakouts. The price has been trading below the 200 EMA for an extended period, creating some uncertainty in the market. However, the 200 EMA is generally considered a critical indicator for determining the overall market trend. Currently, the fact that the price is below this important level suggests that the market is under downward pressure and investors may be acting cautiously. However, this situation could potentially turn into an opportunity in the long term. If the price manages to break above the 200 EMA, this could be a sign that the market is starting a strong upward move. Breaking above the 200 EMA indicates that buyers are becoming more dominant in the market and that prices are beginning to rise. This would be considered a significant signal for technical analysts and investors, as breaking above the 200 EMA is often seen as the beginning of a broader upward trend. Furthermore, a sustained move above the 200 EMA would indicate that the market has entered a stronger buying phase and is potentially trending toward higher price levels. In this case, it could be said that buyers are in control and the market is entering a recovery phase. Such a breakout could present an opportunity for investors, as a long-term upward trend could create significant profit potential. When the price breaks above the 200 EMA, it is typically regarded as the start of a long-term upward movement. This breakout increases the likelihood of higher price levels, and investors could view this as a chance to enter the market. Since the 200 EMA is a level that is closely monitored by major market participants, breaking above it can boost market confidence and attract more buyers. Such a move would be a positive signal for investors because long-term upward trends typically have strong foundations and create more opportunities in the market. If the price breaks above the 200 EMA, it could mark the end of a short-term correction and the beginning of a long-term rally. This could create momentum that drives prices higher and strengthens the market. Breaking above the 200 EMA could even trigger a rally in price. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of